what is the past performance of gold versus stocks, what should be the maximum allocation of gold in your portfolio, and a myth will be busted about gold jewelry as an investment, and if you want to invest in gold, how you can invest in Indian markets. Hello everyone, welcome back to my channel. My name is Pruthvi Ravindranathe. I am your wealth wisher. Today we are diving into a topic which is on every investor's mind. Should you invest in gold or stocks? And this question is as old as investing. So we'll be diving into this topic and try to understand what is the past performance of gold versus stocks, what should be the maximum allocation of gold in your portfolio, and a myth will be busted about gold jewelry as an investment, and if you want to invest in gold, how you can invest in Indian markets. So if please make sure you have a notepad and pen handy and make notes for whatever is relevant for you. And for now, let's get started. Let's look at the past performance or historical performance of gold versus stocks. Historically, gold has been considered as a safe haven asset class. And during the times of economic uncertainties, the value of this asset class tends to rise. But on the other hand, equities or the stocks have the high potential for very high returns, but they come with higher volatility as well. And this is more important, that the data shows that in the long term, stocks have always outperformed gold in terms of returns. But gold can be a crucial component in your portfolio to create that diversification and protect your portfolio against market turbulence. So now in the next part, we'll try to understand whether gold is needed in your portfolio, and if it is needed, why it is needed. One of the main reasons why you need to consider gold in your investment portfolio is diversification. When you have a mix of asset classes in your portfolio, including gold, it reduces the overall risk of your portfolio. And moreover, gold behaves differently when compared to stocks, and it is considered to have a negative correlation per se. And what does negative correlation mean here? It means when the stock market, the value of stock market rises, the value of gold reduces. And whenever the value of stock market or stocks reduces, the value of gold increases. And that's why gold in your investment portfolio might act as a hedge against market downturns. Secondly, gold is also considered as a hedge against inflation. Whenever your purchasing power of rupee erodes due to inflation, the value of gold increases. And therefore, gold as an asset class will protect your investment portfolio and act as a hedge against inflation as well as market downturns. But how much gold allocation to have in an investment portfolio? We'll try to understand that in the next part. Now it's a very important point here. While gold is a valuable addition to your investment portfolio, it shouldn't dominate it. Financial experts recommend that the maximum exposure to gold as an asset class should be not more than 5 to 10% of your overall investment portfolio. This percentage ensures that you have enough exposure to the potential benefits of its properties without overexposing to its volatility. Now you might start calculating the value of your gold jewelry and see how much percentage it is in your overall portfolio, but stop there. I would like to bust a myth about gold jewelry in your investment portfolio. And for that, watch the next part. There is a common misconception among Indian households that gold jewelry is an investment. Sorry to say this, gold jewelry is not an investment. And there are three reasons for it. Number one, gold jewelry is a consumption asset. Why you bought it? You bought it for its aesthetic and cultural value and to look good, and not as an investment. Number two, if it was an investment, then it should have end purpose. Whenever investments comes in picture, it has an end purpose. You are saving and investing money to achieve something at a later date, to buy something at a later date. But gold jewelry is that financial goal, it's the end purpose. It's not the starting point wherein you invest and at a later date you get something. So gold jewelry is the end goal, not a starting point. And number three, if you need money, if you are an emergency, the chances of you selling the gold jewelry is very minimal because of its cultural and aesthetic value. You might pledge it and get a loan, but seldom you sell it. So that's why gold jewelry is never ever considered as an investment. But if that is the case, how to have gold in your investment portfolio? For that, watch the next part. So if you are interested to invest in gold, how to go about it? There are three major options in India. Number one, simple gold mutual funds. These mutual funds pool money from investors and invest in gold related assets. Number two, gold exchange traded funds. These funds work very similar to mutual funds, but they get traded on stock exchanges. This is a very convenient way to invest in gold rather than investing in physical gold. And number three is one of the best option available in India currently, and that is sovereign gold bonds. These sovereign gold bonds are a government issued bonds which track the price of gold. And they have two advantages. One, they provide a fixed interest rate of 2.5% per annum, and also you get the benefit of capital appreciation. See, each of these options have their own pros and cons, and we need to make sure that we do diligent research and then invest in it according to your investment goals and risk tolerance. Or please consult a financial advisor before investing in any of these options. In conclusion, the decision to invest in gold or stocks should depend on your investment goals, investment horizon, and risk tolerance. Both of these asset classes have their own pros and cons. While stocks can provide you good returns, gold can act as a hedge against inflation and market downturns and provide better diversification. Please remember here, there is no one size fit all approach. Please consult a financial advisor before taking any investment decisions. And if you have decided to invest in golds, the ideal allocation should be not more than 5 to 10%. Saying this, if you like this video, please share with your friends and family members. Please hit the like button and subscribe to my channel for more information about personal finance, investing in mutual funds. And don't forget to hit the bell icon so that you will never ever miss an update from my end. Saying this, happy investing and see you in the next video.